Have you ever bought something big for your photography business, like a new computer? I just did that last week, a camera body, or even studio equipment, and then thought, wait, how do I actually handle this for taxes? Maybe you didn't have that thought right away, like I may, but at some point, this may come across your brain. And that's where something called amortization comes in. Now, before you tune out thinking this is some scary accountant word and I'm going to skip to another video, please stick with me. By the end of this video, you'll not only understand what amortization is, but also how it impacts your photography business and your bottom line. Hey friends, I'm Heather, a wedding photographer turned tax educator for photographers. I know the financial side of business can feel overwhelming, but my goal is to make taxes suck less. So let's talk about amortization in plain English. I promise no boring textbook definitions here, just real examples for photographers like you. So what is amortization? Think of amortization as a way to spread out the cost of something big over time. If you buy a $3,000 lens, you could just expense it all in 1 year. But sometimes, especially for things that last several years, the IRS is going to say, hold on, you need to spread that deduction out over the useful life of the item. So instead of deducting $3,000 all at once, you might deduct $600 each year for 5 years. That right there is amortization, slowly writing off a business expense over time. Now, here is why this is important for photographers to know. Number one is cash flow is different than tax flow. So you paid for that gear up front. So in terms of cash flow, that money left your account and you can no longer touch it. But in tax rules, it doesn't always let you deduct it right away. So for tax flow, that money may not leave right away and become a deduction all in the same year. It might slowly become a deduction over several years. So it's really important for you to understand those differences. The next thing is this can be better long-term planning. Amortization helps spread the deduction so your taxes don't swing wildly from year to year. This is a benefit for your business so that you're not paying crazy taxes 1 year and then getting money back the next year. It helps it keep it streamlined and pretty consistent. And then lastly, it's not just for gear that you should be worrying about amortization. Things like software licenses, websites, or even if you ever buy a business, all of these expenses can fall under amortization too. So while it may not sound like the most exciting thing and it's just a boring accounting rule, it actually affects how much you keep in your pocket each year. So it's beneficial to understand it. So what should photographers do about it? What should you actually do with this information? Here are 3 quick steps. Number 1 is know what counts. Not every purchase needs to be amortized. Small purchases like memory cards or camera straps can usually be written off right away. Bigger items with a useful life of more than a year and often costing over $200, that is where amortization comes in. Step number 2 is check your options. Sometimes you can choose between amortization and something called Section 179, which lets you deduct the full amount right away. So you could have an option of amortizing that expense or deducting the full amount. This is where talking to a tax pro really pays off because the best option depends on your income and your goals for that year. So your accountant or CPA is a really good person to see what is most beneficial for you. And then step number 3 is stay organized. Keep receipts, track your big purchases, and know which ones might need to be spread out. This makes tax season and conversations with your CPA so much easier. I personally have a separate spreadsheet just for my larger purchases so I can remember the items I want to review with my accountant. And if this still feels overwhelming, don't worry. This video is brought to you by my free guide, 15 Business Tax Categories Breakdown. It's the perfect starting point to understanding where your expenses fit, what you can deduct, and how to simplify your finances as a photographer. The link to grab your free guide is right below this video. And honestly, reach out if you have other questions as well. So let's recap. Amortization is just spreading out big expenses over time. It helps smooth out your taxes from year to year, giving you a more consistent understanding of what you're going to owe. And you don't have to figure it out all on your own. You just need to know what purchases might qualify and stay organized so that when you talk with your accountant, you can share that information with them. The more you understand these concepts, the less scary your business finances become. And the best part, you don't need to be an accountant to feel confident here. You just need the right tools. All right, friends, I hope that cleared up some of the mystery around amortization. Now, I want to hear from you. What's the biggest purchase you've made for your photography business so far? Drop it in the comments. I'd love to know. And don't forget to like this video, subscribe, and hit the bell so you don't miss any future tips to help you grow a sustainable photography business. You've got this, and I'll see you in the next video. Bye, guys.